This is Ambition Today. Today we are joined by Anthony Pompliano, also goes by Pomp. He is the managing partner at Full Tilt Capital.
These are the entrepreneurs, creators, investors, and builders who ambitiously change to the world. Explore the hardships and heroisms of everyday life while we reveal the key moments to leave behind a lasting legacy. This is Ambition Today with Kevin Siskar.
What's up, world? I am Kevin Siskar, and you are listening to Ambition Today. Make sure you subscribe to our website, siskar.co, or in your favorite podcast app so you never miss the latest Ambition Today episodes. Such as the last episode where we talked to Brian Bro. He is the global chairman of EO, Entrepreneurs Organization, and the founder and CEO of Pure Room. But today we are joined by guest Anthony Pompliano, also known as Pomp on Twitter, and he's the managing partner at Full Tilt Capital, which started investing in traditional startups, but now is almost exclusively going to focus on startups in the cryptocurrency space. So I'm really excited about today's conversation with Anthony. Pomp, welcome to the show. How are you today?
I'm doing great. Thanks so much for having me.
Thanks for joining us back in New York on a wintry, snowy day. So I want to take it back to the early days at home. I know you might be the first guest actually representing for the Southeast United States. But where did you grow up, and are there any lessons from your early years that you feel define you still today?
Yes, I was born in southern Florida, Hollywood, Florida, right outside of Miami, and then moved to Raleigh, North Carolina, where I grew up. And I think that, I grew up, I was the oldest of 5 boys. And so one of the things that my parents always kind of hammered into us was just like, you are who you surround yourself with. Right. And so luckily that was my brothers growing up. But as I've, kind of matured and grown up, both personal and professional life, I think that's always kind of stuck with us.
Yeah, it's interesting. I'm the oldest of 4 as well. I have 3 younger brothers.
It's great being the oldest.
Yeah. Well, so sometimes I think about it, I fell into entrepreneurship, and sometimes I wonder, and my brothers are probably going to be listening to this, but they were kids at one point, and there was times where it was like I could get them to do stuff. I was the oldest.
Absolutely. I tell people all the time a story of so I can't say that this was necessarily my idea or my brother's. I don't know who came up with it, but whenever it would snow in North Carolina, which is maybe 2-3 days a year, we would race out and we would ask all the neighbors to give us the exclusive on shoveling their driveways. Yeah. And then we would go back to the beginning and actually start shuffling. And so, the people would be like, hey, you came here 4 hours ago and you got me to say yes, and you guys still haven't started. When's that going to happen? Well, there's only 5 of us. Yeah. Right? And so,
you must have took a ton of contracts.
we used to try to go get half of our neighborhood. Yeah. Right. And then, you basically would negotiate, hey, do you want the whole driveway or do you just want the tracks so you can get out? And so you very quickly learn that, there's certain things that you can do to kind of, speed things up and get more volume. Yeah. There's
almost something entrepreneurial about just growing up in a big family, and especially being the oldest. So, all right, moving on from there. I know you double majored in economics and sociology at Bucknell. I personally love learning about how humans work. I majored in cognitive neuroscience and I minored in philosophy. So I want to ask, being as both economics and sociology deal with understanding human behavior, how important do you think understanding human behavior is to being a great investor now?
Yeah, so I can't say that I had a master plan. Right. I think I kind of just backed into to enjoying economics and sociology. I really look at it in hindsight as one's a macro view of the world, right? One's a more micro view of the world, and it's important not only to understand the individual, kind of nodes and who they are, how they act, why they act, how they make decisions, all that kind of stuff. But then also how do they fit into the more macro economy and system, and how do the decisions that are made at that macro level affect the individuals is really important as well.
Okay, awesome. And then I know you then from there, you actually got pulled out of college, right? Because you were in the Army. Can you tell us a little bit about that story?
Yeah, so when I was a junior, I had been in a reserve contract up until my junior year in college, got pulled out, deployed overseas, was gone for about 12, 13 months to Iraq. It was probably one of the better experiences of my life, not necessarily because it was, a positive thing, but I think it just kind of, it took me, and again, going back to like, you know, who you're surrounded with, I was one of the youngest people there. I ended up having a team of soldiers that, you know, were in combat. And so you just kind of are around people who aren't talking about what's the party on Friday night or, you know, what's the class assignment. They're talking about, I have a wife and a kid and a mortgage and, you know, all of these things. And so I think one, it forces you to mature very quickly. Two, obviously the military does a great job teaching on the leadership side, teamwork, all that kind of stuff. And then the third thing is, you know, a deployment like that really injects you into a foreign culture in a unique way, right? So like you could go on a tourist trip and you'll kind of stop at all the places everyone else stops, right? It's very different though when you are deployed and you're going through the back, you know, neighborhoods and going to people's homes and doing all this stuff, and you're cognizant of the fact that like you're doing it all while you're holding a rifle in your hand, right? So the interaction with the local population is a little bit different, but you just see how these people live, right? And I always tell folks that Iraq was the one place where I saw people who were incredibly ecstatic that we were there, and they looked at us as liberators and you know, a sign of freedom. And their neighbor looked at us like we were the worst people in the world and they wanted to kill us. Yeah. Right. And so kind of seeing that contrast of in the same neighborhood was really interesting and something that, you know, I paid attention to while I was there.
Well, that's super interesting. And this is actually a theme that, you know, as we're getting into further episodes, we're into the 30s now, there's starting to be more and more themes that are kind of emerging across our guests. And one of the main ones, I mean, I don't know the actual stats, but I would say at least the majority of our guests have spent decent amount of time abroad, whether in South America or Iraq or Europe or Asia. And they've all said how that's just changed them and built this like empathy and greater understanding of the world. So that's amazing to hear. And thank you for your service as well. Of course. You know, so how do you reconcile that, right? And like, and now that you see this like breadth of diversity and you know, this person hates me, this person loves me, how does that help you think about, like, I guess what I'm trying to get at, what spectrum does that create in your head? Yeah. And then when you look at founders and then you're investing today, like, you're aware that there's just so many different people. Absolutely. And like, how does that play into like how you view people now? Yeah. So I think there's a couple of things. You know, I've been very fortunate that I've been able to travel quite extensively. And so I think that not only is it just being immersed in one culture, but also being able to compare, you know, somebody in Iraq to somebody in Israel, to India, to Nigeria, to wherever. And I think that you realize two things. One, humans are humans, and so they have a lot of the same wants, desires, needs, etc. Right? But then two is there's a lot of differences as well. Right. And while that sounds, you know, somewhat obvious, I think what you begin to realize is, you know, take a mobile phone, for example, right? There's people all over the world want to use these mobile phones, and, you know, it's a gateway to information. It's a gateway to entertainment. It's a gateway to the rest of the world. But then when you look at the usage of what they're using it for, there's a lot of similarities, right? So, you know, e-commerce, information, all that kind of stuff. But there's a lot of differences as well, right? And so, you know, just take the continent of Africa. Right. I would make the argument that in some areas in Africa, they're actually farther ahead when it comes to mobile banking than the United States. Right. And somebody who's not familiar with that would kind of be shocked to learn that, you know, a continent that I think most people in North America would see as, you know, kind of a third world, you know, full third world countries, they're actually farther ahead on a technological advancement than people in the U.S. And so why is that? Well, like they just skipped a whole generation of banking. Right. And so I think that you can go around the world, you can see all these things where some areas are better or farther along at one thing than another. And so, you know, being exposed to that, I think is really important. And then two is you also see that, you know, how people view each other. Right. So I always find it fascinating how Americans view Americans and then how anyone else in the world views Americans. Right. And, yeah, that's super true. And it can be, depending where you are, it can be positive or negative. Yeah. Right. And then, you know, when I've talked to people about, hey, what do you think about this topic that's really popular in the U.S.? Sometimes the answer is like, we don't even know that's going on. We don't even care.
right?
Yeah.
And frankly, look, people in the U.S. don't really care so much about, kind of geopolitical things that are happening in other countries or other regions. And so it's just a reminder that, look, the United States got 330 million people, right, out of 7 billion on the planet. Like we're important, but we're not that important.
Yeah.
Right.
No, I completely agree. When I lived in London, I was shocked by all this, drama is happening in the United States. Obama was president, and like everyone at home is just freaking out. And I'm watching, British news, and the BBC is, very credible world news.
Yep.
Just like no one gives a shit. They're not even talking about it, right? And so I've always since living there, I actually every morning, even on my Alexa, I get my flash briefing. I listen to NPR.
Yep.
I listen to NBC nightly news, and then I listen to the BBC. And it's very interesting because like which stories made it into world news where like actually the whole world is talking about it versus what the U.S. is talking about and we think was world news, right?
Absolutely.
And maintaining that perspective is great. And then the other thing you touched on that I really liked is like, realizing that everyone is just human, right? I think a lot of people they put people on pedestals, and because of that, they feel like they can't ever do things or attain that. And like, I think Steve Jobs once said, like, everything is built by humans, which means like anyone can understand it, really. You just have to put in the time and energy to dig in and understand it.
Absolutely. I mean, look, we're talking today, the day after Musk just launched the Falcon Heavy. Right?
Oh my God, it was amazing.
First of all, just insane, right?
Yeah.
And the fact that I think that he and crypto are inspiring a whole generation of people to go after certain things, right? But I love his story. I think everyone else is focused on like the end result and the successes. The part that is so interesting to me about his story is the work that he put in, right?
Yeah.
This guy's not a rocket scientist, right? No. But he spent the time and learned and understood and took, his interest in engineering and basically reimagined an entire, industry.
Yeah.
Right? And he didn't snap his fingers and do that. He's not walking off the street and just, I think this is a better way. Right? And he spent the time to actually learn this stuff. And, there's tons of stories about how he did that and everything. But to your point, I think that it's possible to learn anything, right? We have access to that information. It's just, are you willing to actually, put in the time and in fact, are you willing to stay disciplined enough to keep your interest?
Yeah, and I couldn't agree more. And if you haven't watched it, if you're listening and you didn't watch the Falcon Heavy launch yesterday, go on YouTube, watch it. It'll re-inspire your faith in humanity. Adeo, who we had on a few episodes ago, he's friends with Elon, so he was Facebook live streaming from the back with the board members, and it was amazing to see both perspectives. So cool. So let's keep going here. So. After the Army, you started the Community Corkboard and Digiforce, both of which were acquired. Tell me a little bit about those companies, what they were, why you started them, and what the result was.
Absolutely. Yeah. So both companies started at Raleigh. They're small technology companies, right? And I think that what I realized in building both of those companies was I had an interest in technology, right? I think too, I felt like I could continue to build these like singles and doubles, right? And build them, turn around, sell them, and kind of keep doing that. But I had this, I don't know if it was like an innate desire or what it was that I wanted to be building larger companies, right? And I felt like I didn't have either the people around me or the knowledge or just something was missing, and I wasn't able to kind of go from building these small technology companies to building really large ones. So what I ended up doing was I had to make a decision. I said, look, I can go to business school, right, and kind of go get that knowledge, or I can go try to find people who have built those big companies, meaning the big tech companies, and kind of join them and learn from them. And literally, I was like, one of those options, I pay them to learn, right? The other option, they pay me to learn. And so I went out to Facebook and frankly, incredibly happy that I did that because it was better than any college course that I could have ever had.
Yeah, it's a perfect segue to my next question. So you sold those companies and then you went to work for the growth teams of Facebook and Snapchat. What was it like being inside a company like that while they're growing so fast? And what lessons did you learn?
So to give context here, I'm pretty sure that this is accurate. I think I was there. We had like less than 4,000 employees at Facebook, and when I left, they had like 10 or 12,000. Right?
Yeah.
It grew very quickly, It was an environment where there's a couple of key takeaways, right? So one, there's just constant pursuit of what is the best idea or the best product or the best solution, regardless of who brought it up or how we got to it, right? So I think that's one. Two is you really felt like you were working with the best people in the world. Right. I mean, they just did a fantastic job of recruiting and retaining that talent, both at the leadership level where, if you look at their executive ranks, those people have been there for a very long period of time, all the way down to, the individual line engineers, incredibly talented people, highly self-motivated, et cetera. The third one was there's a massive user base. Right. So, the impact on the world was very obvious. And I think that before I got there, I didn't realize like how self-aware the company was on that stuff. Now it's coming out even more around, all this fake news and all this stuff. Mm-hmm. But I think that, their response to a lot of this stuff is tangential here in that they understand, hey, look, again, we're important. We're not the most important thing in the world. And we need to be, responsive to feedback and we need to constantly be testing things and really listening to the community. Right. And so I think the company would be the first one to admit, like sometimes they reacted, fast enough and other times not fast enough. But kind of seeing a company grow that fast, drive that much revenue, but yet still be, kind of humble enough to understand, hey, we're going to make a ton of mistakes along the way. And that's actually okay, right? Like if we're not failing doing some of that stuff, then we're probably not pushing the envelope enough. It's just like, that's a very complex concoction of different things that come together.
Yeah. I mean, and that's actually another theme where I've kind of seen it across the show is greatness creates more greatness. Mm-hmm. If that's how I want to say it. But I guess what I'm trying to say is you see these patterns where people that do incredible things next observed incredible things during a time, right? Absolutely. And so it's really interesting, early, and it's like the PayPal mafia, and we're seeing that slow down a little bit with the lack of IPOs and mm-hmm. a problem with liquidity, which maybe we could talk about in the second segment here. But it's really, really interesting. So that's great. I'm glad that you got that experience and loved that time.
Absolutely. Yeah, look, it's when you're surrounded with, high quality people like that and they're able to show you both, kind of through experience, right? And, they're telling you, hey, this is how to do something. I think that's valuable, but also they give you enough freedom to, kind of trial by fire as well. Right? Yeah. And so I think the combination of those two things is really powerful.
All right, awesome. Well, let's take a quick break. We're here with Anthony Pompliano, talking about his company Full Tilt Capital after the break. We'll be right back with more.
This is Ambition Today.
Ambition Today is happy to partner with WeWork, a co-working space that lets you do what you love. WeWork is partnered with Founder Institute here in New York, their startup initiative, WeWork Labs, and we love working with them. They have offices in over 140 locations worldwide, and many of our own portfolio founders use WeWork for their early stage startups. And they can work with anything from a one-person space to full team offices. We had Dennis Mortensen on the podcast from X.AI, and he runs this entire 90-person plus company out of a WeWork. So if you're interested in checking out WeWork, go to siskar.co/WeWork to learn more about the discount offer that you can get today. And Ambition Today is happy to partner with Audible. Visit audibletrial.com/ambition today to download and keep any audiobook for free. So Pomp, thanks for being on the show this episode. You mentioned that you're an Audible fan as well. Is there a book that you recently read or you would want to recommend?
I am a big Audible fan. Red Notice. I recently just finished, which I thought was pretty good.
What was it about?
So it's about a American financier who basically goes to Russia and realizes that all the companies are undervalued, begins buying up equity in those companies, and then ends up having to deal with all the trials and tribulations of doing business in Russia, and the corruption, etc.
That sounds amazing. I might have to check that out. Mm-hmm. So if you want to get your free book, now visit audibletrial.com/ambition today to download and listen for free. And now back to this episode of Ambition Today.
Visit Ambition Today online at siskar.co and follow the show on social media at Ambition Today.
Welcome back. We are here with Anthony Pompliano, and we are talking about his company, Full Tilt Capital. now that the break's over. So I think, Pomp, we've got ourselves up to present day. You are now the managing director for Full Tilt Capital, which you also founded. Tell us about the fund, how it started, and where you are today.
Yeah, so I partnered up with my friend Jason Williams, and when we originally started, we said we think that we can go invest in the best people and companies at the earliest stages across the U.S. Not so much worried about what industry or location they are, but we just want to find the best founders. Right. And so I think a lot of investors would say that they invest in, people, but they kind of wrap that approach with a whole bunch of other thesis or focuses, et cetera. But ultimately it boils down to they invest in people.
Yeah.
Right? And so we just said, look, rather than, say something else, why don't we just say what we're going to do, which is what everyone else does. We're going to go invest in the best people.
Yeah. Which is harder to do than say.
Yeah. Much harder to do.
Like with Founder Institute, and me and you have talked about this before, we have this test where we basically check people's personality traits and bring them in. And we actually, more often than not, don't even meet them in person prior to accepting them. It's all about their personality, their application. And so, and then we track them for throughout the 14-week program, and then they're grads, and we track them in the portfolio for a while. So it's amazing to see people over time, track them month to month, look at how their personality plays into the company. What do you look for in founders?
Yeah, so I think that there's a few things. One is just intelligence, right? I think two is salesmanship, right? In terms of they got to get us excited about the company. If they can't get us excited, then it's going to be hard to get employees or investors or customers, et cetera, excited. Three is we look for a high level of empathy, and empathy for us is less about, or it's more about just the empathy that comes through exposure to lots of different people's cultures, products, teams, et cetera. We're just looking for somebody who's got a depth of experience across multiple things. And then the other thing is just, and the hardest thing to measure for is persistence, right? Building companies is incredibly difficult, and the fastest way to fail is just to fucking give up.
Yeah.
Right. And I am amazed at the founders who come in and they pitch and they're so bullish and they're going to go take over the world. And the first thing that pops up and something goes wrong, they quit. Right.
The most successful people I've had on this podcast have all told me, and it's amazing. You can just when you're talking to them, you can just see it in their eyes. They wouldn't shut the company down. They would bring the company down to one person themselves, reduce the burn rate, and build it back up. Yep. Failure isn't even an option. They're like, no, we're doing this thing, and we're going to be done with this thing when I get it to where I want to go. But there is no end, right? Yep. And bleeding persistence, which I totally get that.
Absolutely. And part of it too is, look, I tell a lot of our founders, you don't have to be honest with me, right? I want you to be, but you don't have to be. You got to be honest with yourself though.
Yeah.
Right. And so, look, we've had founders go through probably a lot of the struggles that you're going to face in the early stage. Right. And when you're talking to them, a lot of times they say, X is going wrong because of Y reason. Right. And maybe that's true. A lot of times it is true, but every once in a while it's pretty obvious that X is true, but it's not because of Y reason. It's because of Z reason. And so getting them to tease out what's the reason for something happening is, somewhat difficult. It's even more difficult when it might be the founder themselves.
Yeah.
Right. And so what I always tell them is look, if you're intellectually honest with yourself around everything from what are your strengths and weaknesses to what is your team doing well, not doing well, to, hey, it's getting really bad and you think that this, quote, doesn't work. Is it actually just the easy way out and you're going to quit? Yeah. Right. And I think that intellectual honesty with yourself, we find the less experienced younger founders have a much harder time doing that than the more experienced older founders. Part of that is probably just there's more comfort with themselves and they've just been through a multitude of experiences and they don't have anything left to prove necessarily. And some of it's personality based, right? And obviously that's an overgeneralization to some degree, but I think that intellectual honesty is kind of a precursor to the persistence piece.
Well, and going back to your point about being deployed and spending time with older people, right? I think self-awareness has almost lost some of its meaning because it became a buzzword in Silicon Valley, but I still love what it's supposed to be saying, which is it's taking the time to get to know yourself, because the founder drives everything in the company. And if you don't understand what's driving you, how can you understand what's driving your company, right? And so...
and here's a great example, right? So like one of the things that I full-heartedly believe is if you're a founder and you can sit down and you can make a list of here's all my strengths, here's all my weaknesses, right? The strengths, you've got to own those. You've got to be the best person in the company at doing those things, right? Because you're the leader and those are your strengths. Your weaknesses, right next to each weakness, who on your team is going to be the best at that, right? Who is the person who, if you say, hey, I'm not organized, right? That's a nightmare for a founder unless they have somebody on their team who's very organized and can take on all the responsibilities around organization. Yeah. Right. And just, if you kind of do this exercise and you find weaknesses that you have and you don't have a name to put next to it, well, there's your list of what to go work on. Yeah. Right. Either you need to become good at that or you need to find somebody that you can bring in that can take on those responsibilities.
I couldn't agree more. And it's important that people take the time, figure themselves out. I think that's why I'm so bullish on like soft skills, right? Like I just taught a productivity course for 2018 with Todoist, and it's free. It's a half hour. It's on the website if anyone wants to check it out. But yeah, just getting all your ducks in a row and doing the self-work. The earlier in your life you can do the self-work, the more dividends you can reap from it in your 30s, 40s, 50s. Couldn't agree. So where's Full Tilt going in 2018? I know you guys just raised some money.
Yeah, so we wrapped up our first fund, ended up investing in about 60 early stage companies. And then as we've gone out for Fund 2, we're going to be exclusively focusing on tokenized securities, blockchain infrastructure, and just, I think we're very big believers in crypto and a lot of the things around that. And for us, the litmus test was really just, hey, in 5 years, how are most companies going to raise money? Right. And we said that we believe it's going to be through tokenized securities, et cetera. And so if that's going to happen in 5 years, do we really want to keep, investing in convertible notes and priced equity, or do we want to go and invest in what, is eventually going to become the future mechanism for fundraising? And if we start now, we're probably got a pretty good shot of being the experts by the time everyone else decides that they agree with us.
Yeah, no, I love it. And we're going to come back to crypto in just a minute. I'm going to pivot quickly on crypto tangent because I want to talk about at the end of last year, you announced something called Standard American Mining. And I love the ode to Rockefeller's Standard Oil, by the way. And so it is, to the best of my understanding, a Bitcoin or crypto mining company built in partnership with a tire recycling plant to drastically reduce the electrical cost of crypto mining. Am I correct? And I would love to hear the story of like how this came to be, because I grew up by Niagara Falls. Was, free energy is a thing we talk about, and it's the biggest cost to doing crypto mining. Like, how did you come up to this, and why did you build it?
Yeah, so when we first started looking at crypto, I just made a personal investment in some mining equipment, right? And I just said, look, I want to start from the very beginning. I want to start from the infrastructure layer and kind of go up to really understand and learn. And so as we saw that how that worked and the kind of the economics there, we said, what are the inputs to this business, right? It's essentially energy, hardware, right, and time. Right. And so the largest cost being around that energy. And we had access. My partner runs PRTI, which is the tire manufacturing company, tire recycling or waste energy company. And so we had a power source, and the power source, was, if we self-consumed it, was essentially free or zero cost. And so we said, well, rather than sell this into the grid, why don't we just consume it on site, with a mine? And, Jason and I get along really well because I think with the same approach to a lot of things, right? And it actually goes to the name of Full Tilt. We believe that the fastest way to success is actually just building momentum. Right. A lot of people, they sit and they plan and they want to, do all the strategy and make sure everything's perfect and then move forward. We actually kind of take the opposite end of, we just say, look, let's get started. And so we literally built 3 rigs. Right. And I've showed people pictures and videos of this and they laugh. They're like, there is no way that's where you guys started, right? And we're like, yeah, no, that's literally what we did, right? And so we started with, amateur would be a compliment, right, of kind of where we started, to eventually creating a very professionalized, operation that we feel really good about, and now we have begun to build additional facilities, and so that first one is based on the tire thesis and using that zero cost power, but the company Standard American Mining, which we had incubated internally, essentially goes around and looks for, interesting energy opportunities, right? So sometimes that's zero cost, sometimes that's low cost, sometimes there's vertical integration with a power company, and there's all these different things that we can do. But we think that by bringing that mining expertise to these energy sources, we can do some pretty interesting things.
That's great. And so the other thing I wanted to ask you quickly on Standard American Mining, I was listening to another podcast you were on. Can you talk quickly about how you see the future of GPUs versus CPUs, and how you've built Standard American Mining? Yeah, so... and for the audience that's not technical, maybe just explain what that means. Yeah, so CPU and GPU, the main difference, is just CPUs can do less complicated or less complex computing tasks than a GPU, right? And I think it's kind of the most basic reason. And so for us, the world is very CPU heavy in terms of most large computing facilities are CPUs. This is, the Amazon. Google, your MacBook has a CPU. Yeah, exactly. And look, they are all the cloud hosting, all this stuff. We believe that as artificial intelligence, machine learning, AI, CGI, all this stuff becomes more prevalent, GPUs will become much more in demand, right? And so if you look at mining, there's basically two types of hardware you can use. You can use ASIC-based chips, right, or you can use GPUs. And so when it's almost like a Venn diagram, right, with mining and then kind of just real world computing needs, like the overlap is on the GPU side. And so we said, we can actually hedge our bet by building GPU facilities that if mining cryptocurrency completely goes away, we can always use this hardware for any of the AI, ML, et cetera. And so we started building almost exclusively GPUs. We've now started to incorporate some ASICs, but really the belief there is that GPU farms will become incredibly valuable over the next 10, 15 years. And they can today be built for about a tenth of the cost of a traditional data center, right? And so if you can start to build something that's a tenth of the cost, you think it's going to have a long-term sustainability and value, and you can do it with some really interesting energy arbitrage or savings as one of the main inputs. We think that those three ingredients create a really interesting business. All right, that's awesome. Really interesting, especially when you think about like NVIDIA and like how that transition will happen between the CPU companies and the GPU companies. So let's take it back to crypto for another minute or hour. We'll see. So I guess why are you so? Because all right, the whole industry has talked about crypto. Everyone's talking about it in the end of 2017 And I know you spend a lot of time in the Valley and New York, and we're headquartered in the Valley, so I'm out there. But I feel like this is the first time I hear people on the subway talking about Ripple and EOS and crypto. And New York is not traditionally... It's a very diverse city, right? We have entertainers, we have Wall Street, we have the fashion district, and everyone has their stuff, and it creates this amazing melting pot of diversity and creativity being thrown around. But this is like the first thing that literally everyone is talking about crypto. It's like you're in the Valley and you're sitting in a coffee shop and someone's talking about a venture capital deal, right? So like, with that, right, we know it's not going to... If you think about the .com, everyone's talking about it, right? The thing here is like Google and Facebook and some stuff will come out of this and emerge as the real players. Why are you bullish on crypto and blockchain in 2018? And why are you so confident in that? I'm confident in it as well, but I want to hear how you came to that and why you're kind of putting all your eggs in that basket and betting on the future. Yeah, so I think that let's just do a lay of the land real quick. So you've got, in blockchain, you've got what we consider infrastructure, right? So this is, mining, exchanges, wallets, all that stuff. Then you've got what I would consider
the utility tokens, right? So this is everything that, is not a security, it's not equity in a company, but is used within a network, right? Also I'd include like the protocols, et cetera, in that bucket. And then you've got securities, right? So you got these tokenized securities. Our thesis at Full Tilt is really around the first and the third bucket. Right. So on the infrastructure side, we're mining already. We believe that the wallets, the exchanges, it's the picks and shovels, right? And we literally invested in a company called the Picks and Shovels Company. Our belief is that this industry will continue to grow and quite large. And so if you are investing in infrastructure companies like that who benefit, as the industry grows, you will make money. Right. So I think that's the first bucket. That third bucket around tokenized securities, security or tokens can be used for one of two things, right? Most people in Silicon Valley would tell you that they're very interested in using this technology to build new things, right? So what's the new shiny thing that we can build with this new technology? We think that there will be a ton of things that are built doing that, right? If you look at when the internet was created, all of the new things that we got, right? The other side of that is you can take this new technology and apply it to old things, right? We at Full Tilt believe that applying the new thing to the old thing is actually going to create a much larger market and much more value on a total aggregate basis than applying the new thing to create something new, right? So what do I mean by that?
Yeah. What do you mean by that?
Yeah. So I'll give you an example. Real estate, right? Real estate is one of the greatest wealth generators in the world. Real estate is something that is heavily de-risked because it's got a hard asset behind it that most people agree has value. And it's a global product that has a number of different things that people, no matter if you're in the United States, in Singapore, Brazil, wherever, they agree on, some sort of valuation model.
For the land, yeah.
What we believe that you can do is that you can take tokens, you can create securities, right? And you can actually begin to bring every single hard asset in the world into the token economy by tokenizing it, right?
So how do you tokenize something?
So I can take let's say I have an income producing commercial real estate property.
Perfect.
I can, whether I own it, right? Let's say I own the property. I basically can take 100% of the equity. I can do a tokenized security offering. So I can literally create a token, say, if you buy my token, right, there's 100 of them issued, you buy one of them, you own 1% of this property. And then I continue to operate the property just as I would, any other time. And then let's say I begin to pay dividends. If you hold the token, you get your pro rata share of the dividend, et cetera, right? So think of it just like equity ownership, except for you have a token. The benefits of the token, if it's tokenized security, it's still SEC compliant. You still have to be an accredited investor, all that stuff, right? But the benefits are you now have a 24/7 global marketplace that has more liquidity, right? In terms of you've got a global investor base behind it. There's a shorter time to liquidity. There's fractional ownership, right? So I don't have to buy the whole building. I can buy 1% of that commercial building. There is what is referred to as programmable equity. So this is everything from how do you do proxy votes? How do you do governance updates? How do you do any of this stuff? The parallel I use is Tesla, right? So when it comes to programmable equity, every car used to have software in the car. In order to update your software, you either went to the dealership, they updated it. Then there was a time where they gave you like a CD and you could update it.
You had to buy the new map every year and put a DVD in your center console, which was like
exactly right.
DVD would be like $400.
Yeah, and now Tesla comes
map.
out. Yeah, Tesla comes out and they're just doing over Wi-Fi updates every 2 weeks. Right?
Yeah.
Same thing when it comes to your equity. So anything that comes out around voting, governance, etc., like you will now be able to dynamically update that stuff rather than have to go to the lawyers, redraft documents, all that. So what ends up happening here is you get, with tokenized securities, especially the ones backed by hard assets, you get all the benefits of the old world, right, with the added benefits of the new world. And so when you look at if you invest in the new shiny things, right, that will become a massive market. We think that new shiny thing, that market will be dwarfed by tokens with the old traditional finance world, right? And so that's where we chose to go focus a bunch of our time on, is if we can invest in that world, there's not that many people who can understand the finance side of things and also understand the token side of things and kind of marry them together.
And it opens it up. It's no longer a U.S. thing. It's a global thing.
There is going to be an absolute tsunami of capital that comes into the tokenized security world over the next 24 months. 100%. That, I tell founders all the time. So somebody asked me the other day, I said, look, I think that, 12, 18 months, one of the big banks is going to come try to buy Coinbase, right? And he said, why would they sell? Why would they sell? They're making so much money. I said, I understand that, but most tech founders have never seen bank money. Right. And what I meant by that is, if you look at most private equity shops, they're doing deals. The size of their deals would be the biggest deal in tech, in a given year. Right. And so when you start to compare just the
SoftBank has $100 billion fund, right? Like,
I mean, it's nuts.
Yeah.
Right. And so I think that's going to I'm very interested to see how those two worlds come together when you bring a bunch of technologists with, the finance ability to deploy capital. Like, that intersection is just going to be a very interesting thing over the next year or two.
Yeah, and I think that I agree. This is going to be huge in the next year or two. If people don't get on board, they're going to fall behind, and they'll be able to try to play catch up later. But I think it'll be a bit too late. And then you see everything like the Dow the other day dropped 1,600 points, and the crypto markets crashed for a little bit. But we see this wave over and over, and it's repeated itself. And I don't think Bitcoin's going anywhere. It's the medium through which every other crypto is bought and transacted through, right? Mm-hmm. It'll be a really interesting year. We'll see what happens.
Yeah, look, and I'm a huge believer that part of this is, I call it a revolution, right? Because I really do believe that there's both a technology revolution, but there's also a social revolution going on. Look, the distrust in institutions is the lowest it's ever been. All those data points. But the part that is the most interesting to me is this idea of we live in a global world. Right, and the access to information has created less dependence on nation borders and all this stuff, and so there are certain aspects of our lives that have not caught up to that yet. Right, around ownership, money, etc. And I think that blockchain, the actual technology, has finally allowed us to build the protocols, platforms, applications, etc. that allow us to catch up, and so I think that's going to be really, really interesting. As now the technology is catching up to some of the social aspects. Yeah,
it's a very interesting time to be alive. I think this is basically internet. I know people have used the term 3.0 before, but I think this is truly internet 3.0. Mm-hmm. Desktop was wave 1, mobile was wave 2, and wave 3 is going to be like the decentralized web, which if you go really long term, perfectly sets the foundation for the robots to take over and us to forfeit all control of these systems. But we'll save that for the year like 2050 or something. So last question here, pivoting a bit. Another big name in crypto is Naval Ravikant. He's the founder of AngelList. I know you have a strong syndicate on AngelList. Tell me a bit about why you built a syndicate on top of Full Tilt Capital and how you use it. And how was that segue?
Yeah, so two reasons. One was we've no follow-on capital, right? So when we looked at all the data at the early stage investing, the number one indicator of outsized returns was just getting into the best deals early, right? Mm-hmm. Check size didn't matter, follow-on decisions didn't matter, et cetera. And so we said, look, if we can just go put $50,000, $100,000 in the best deals, right, that will give us the highest probability of outsized returns. Well, when you have a deal that you invested in that is going very well, you want to obviously continue to follow on. We don't have that capital, budgeted within the fund. And so AngelList provides a great way for us to raise that capital and continue investing in the company without actually having to have raised it ourselves. So that was the first one. A second alternative case that kind of came out of that was there would be times where we would want to do a deal where we were at a $100K check. It's a really good deal. There's great co-investors, et cetera. It's like the perfect AngelList deal. We could then, instead of speak for 50, maybe we can speak for 200, 250, et cetera. We still put our capital in, and then we're able to syndicate the rest of it to just write a bigger check into the company. One helps founders, right? They want to raise capital quickly. Two is the people who are in the syndicate that I have, There's some, very helpful individuals to tech companies, right? So this is, director of engineering at a big social network, head of product, all these people who the founders actually want their help. Right. And so by being able to get them all on the cap table in one line item, but still be able to access those people, I think is really helpful for the founders. And so we've enjoyed it.
What advice do you have to people looking to build their own AngelList syndicate or get backers? And do you have any advice there?
Yeah. So, the number one is just like getting the good deals. Right. Yeah. Right. It's kind of the simple one. Two, I think, is trying to get people onto the platform, right? So I forget the exact math, but basically AngelList takes less carry if you bring investors. Mm-hmm. And so I think that like once you hit some sort of tipping point in how much capital you've committed, it kind of snowballs from there. Yeah. But the nice thing that we've seen is once you get one or two good deals done, then what you're able to do is you can start to say, hey, go follow my syndicate. This is the types of deals we do, blah, blah, whatever. And so as AngelList continues to mature, I think that there will be more and more great syndicates that they can choose from if they're an investor on the platform. And so what you want to be able to do is you want to stand out, obviously, but you can do that both through the quality of your deals, the speed at which you're able to fill your deals, right? It's kind of just like people will feel like there's FOMO, and so of course they want to participate. Or three is the quality of the people in your syndicate, right? So I know a couple of people who have, they've got a syndicate, but it's invite only. And so they're very, very high quality people in there. And so just naturally people on the platform want to be in those syndicates because they want to be associated with the people who are high quality.
All right, great advice. So let's we're coming to the end here. It's time for the Ambition Today question of the day. If you have a question, feel free to go to siskar.co and submit it for future episodes. So Pomp, today's question is for me, actually, because I'm curious. So in my opinion, you crush it on Twitter. I love the content you post. It's always original. It's always topical and timing. So my question is, how do you think about and manage your personal brand while also finding time to get your day-to-day operations work done and build full tilt?
Yeah. My Twitter account has become a topic of conversation lately for sure. So we'll just take Twitter head on. Last year, I was sitting there and we were talking about like content and all this stuff and everything. And I basically said to a friend, I said, I wonder what would happen if you started using Twitter how it was intended. Right. And then I think people had started, the tweet storms and all this stuff and everything. And I said, look, at the core, Twitter is just a micro blogging platform. I don't have the time to write blog posts all the time. Right. I actually enjoy writing, but just don't have time to sit down and write, a high quality thing that's going to stay out in the world forever. I said, but and actually, it's funny you mentioned Naval. Naval's the one who I think said, most blog posts can actually be shared in a tweet. And so I had all these thoughts in my head, and I said, what if every single time I'm like, oh, somebody should write a blog post about this, instead of saying that, I should just tweet it, right? And I started, and I think I had like 4,500 followers. Right? Yeah. I don't know, over 70,000 now. And I literally, when I'm going through the day, I don't plan anything, nothing's scheduled. Like, I couldn't tell you what's going to get tweeted in the next, 6 hours. It's just as things come up, either through conversations, reading something, whatever, I just tweet it. And
so you've created the freedom in your day to not I'll write this down and get back to it later, but all right, this popped in my head. Stop, 5 minutes, figure it out.
So I think of it like micro blogging and like note taking. Right. So when something comes up, I actually, rather than write it down in notes, I tweet it and then it's there forever. And so I can go back and there's times where I'll go back and I'll read through okay, these were the 5 points I was thinking about, blah, blah, whatever. Because what I realized is most people, if I'm interested in something, there's other people like me who are interested in it. Yeah. Right. And so just sharing that content. And look, I literally have emails where people are like, hey, what are you doing? You should stop doing this.
I love it.
Yeah. And I probably am a little extreme in this, but I always say to them, you can unfollow me. Yeah. Right. And two, they're probably not my target audience. Yeah. Right. And I frankly, I don't care what, a lot of people think. It's the people who I want to be seeing this are seeing it. And that's really all I care about.
Well, and the other thing you're doing, you must be doing something right because you consistently show up in my tweets you may have missed. Mm-hmm. So the Twitter algorithm is picking up this constant content and just promoting it for you, which is amazing.
And frankly, we should call out like I was one of the biggest critics, right? Like,
I fucking loved. You're Facebook, yeah.
Yeah,
well, I love Twitter. Twitter is like
so I love Twitter, and I just always just be like, man, like it's such a missed opportunity. Like I want to use this product so much more, or whatever. Over the last probably 8 months, 10 months, like they've done a fantastic job with the product. The algorithm alone just completely changed the experience for me. And I think that, stock price looks like it's started to kind of pick up and everyone's all excited about that. But like the product team there probably hasn't gotten enough, acknowledgement for the actual experience of Twitter improving so drastically in, 6, 8, 10 months, whatever it's been, to the point where like, it's definitely helped me in terms of that content, but then too, just like I enjoy it more.
No, and Twitter is so undervalued. Like, I think people just dismiss it. They open Instagram instead. And like, I have friends that, got sick of Instagram. And I was like, listen, just take an hour, take a half hour, curate the list of people you follow, and I promise you will love it. Mm-hmm. And it's amazing because like when there's a Buffalo Bills game on, my feed just morphs into like Bills fans.
Yep.
When something's happening in the crypto world, it just morphs into crypto. Like it's amazing what Twitter is and has become. And I don't understand how we can almost go to nuclear war from a tweet, but yet the stock price is only like $25. But that's a topic for another day. So if you're still listening, great news. You can now join the show's back channel, which we are now formally calling the Ambition Today A-List, short for Ambition List. And if you want to become a fan, you can get exclusive clips from Ambition Today guests. After every episode, I ask every guest the single greatest piece of advice they've ever received and the story of how they learned it. And all that is available for our back channel members. So you can stay in the know, get my daily news feed, and I'll even send you a Twitter thank you. So if you're interested, you can visit siskar.co/A-list to join the show's back channel today. For this episode, the show notes, which include everything from this episode and links to everything we talked about, are up on the website. Share this episode with a friend. They will thank you later. Pomp, thank you for being here. Where can people go find out more about you? Any plugs? Twitter? What's your Twitter handle?
A Pompliano.
Okay. Anything else people should check out?
That's good enough.
All right. Stay curious, everyone, and I will see you all on the next episode of Ambition Today.
Thanks for listening to Ambition Today. Be sure to visit siskar.co to get all the information from this episode and more great content. Until next time, stay curious, everyone.